Hello, this is Brandon from Galaxydoc Market. Today is Sunday, May 12th, 2024. Happy Mother's Day, everybody. As I bring you this around 11:05 a.m. This is a two-part. As you can see here, it's part one. And my videos have been getting exceedingly long because there's so much to talk about. So this time I decided to break it up into two parts, okay? Just so that I can catch your attention, and it is important information. The title I'm talking about is Looking for a Stock Market Turn. Will CPI do it? And this is the market analysis for the week of May 13th to May 17th, 2024. So what I really wanted to do was go into the nuts and bolts leading up into the CPI and then save the technical analysis and macroeconomic indicator analysis that I do that you guys are beginning to like in part two. Okay, just so that it's manageable. Otherwise, this thing could turn out to be a 2 hour long video, and I put a lot of effort into this. By the way, I would appreciate everybody to subscribe if you haven't done so already. It helps me out a lot. I'm trying to get this channel started. I really don't ask for a lot in return. I do have a consulting business right outside of this where I maintain a educational and consultative for psychology as well as technical analysis, anything that you want to ask, as well as a group that I'm trying to form for select few traders that have like mind and as well as they want to learn my methodology, what I call the rampage method. And I want you to understand how that works and if you've been curious. And so having said that, here is the disclaimer. Please pause it, read it, and if you agree, please move forward. So part one. This is part one, guys. Let's discuss the driving news, market direction, and sector review, as well as do a semi deep dive into CPI and all the fallacies that are associated with it. So let's move on. So Goldman Sachs, the guys that's been basically saying everything seems fine. We're on the trajectory for 3 to 5 rate cuts this year, are now changing their tune. And Goldman is now warning consumers are cracking as stagflation threats emerge. Oh my God, I've been talking about this since November, right, guys? We've been talking about the credit demand destruction, how the consumers are tapped out and they are no longer buying discretionary items, but they are buying essential items, and that those things are shown in the last 2 weeks of earnings, right? It's showing up in those stocks, and we will go into those sector analysis. If you don't believe me, I will show it to you empirically. And then, of course, everybody thought this Israel stuff was done and over with, that they were talking about, peace. And there is no peace. The powers that be needs war because the war perpetuation will continue to create fear and instill the ability for them to bring in a new monetary system, and this is what it's all about. And remember, there's that old adage that says bankers take you to war, right? And this is probably true here. So northern Israel is literally on fire after Hezbollah, which is a proxy army of Israel, okay, attacked, and that is going on. Of course, the Gaza truce talks, Israel is basically threatening a scorched earth into Raqqa, whatever, I think Raqqa, anyways, excuse me for that, but that truce talk is back to square one. They can't agree on any terms, and they don't want to. We are headed into potentially a global conflagration that will lead into a new monetary reset. Of course, the average credit card debt in the U.S. This is average credit card, not the rich people, not the professionals. I'm talking about people from bottom rung all the way up have a soaring U.S. credit card debt past 6,500. I've been talking about this, right? Consumers can't buy anymore on credit card, and they are buying food and milk and things like that, which I'll talk about milk later onto their credit cards. They are not buying Disneyland tickets. They're not buying Netflix. They're not buying Hulu. They're not going and buying stupid yoga pants. Okay, they are trying to survive. And now that the credit cards are maxed out, the default rate, okay, on these credit cards are going to soar. So if you look at any of the banks associated with consumer credit, used car loans, and all of those, they're going to be in trouble going forward. So any type of bounces, okay, and if you know your levels, those are prime candidates to continue to short the rips, okay? So, and then, of course, McDonald's comes and just puts the nail in the coffin here, and they're admitting consumers are broke. No duh, guys. I've been talking about this since November, right? In fact, last week I was talking about this. Now McDonald's comes out and they're saying they're planning to reintroduce $5 meal deal. Does that mean that they could have always offered a $5 meal deal and they were trying to gouge the consumers because the U.S. government, U.S. Bureau of Lies or labor statistics continues to tell you that the job market is strong? Guys, look around. How many people are being laid off at Twitter, Nvidia, Microsoft? They're all being laid off, okay? And there are jobs, menial jobs may be available, but even jobs at Home Depot or Lowe's, those entry-level jobs are hard to come by because there's a lot more competition of well-qualified individuals or overqualified individuals looking for those jobs, okay? So then the other issue is I've been telling you to watch gold. Gold has been in a 3-week consolidation pattern. I will talk more about this in part 2. But most central bank gold buying is unreported. What does that mean? You and I have to report it, but the central banks don't because they don't have to pay taxes on them, right? And they are buying gold. Why would they be buying gold unless they know that the current monetary system is ready to go kaboom, right? So in a stunning new report, Goldman sees significantly higher gold prices. Yeah, how is that even stunning, right? I mean, have you not seen that the gold is near all-time highs? In fact, it breached all-time highs like a few weeks ago. All it's doing, it's not pulling back. All it's doing is digesting its like just hyperbolic, parabolic, I'd say hyperbolic actually, rise in the last month or so, right? It's going to take a break, but it is going higher because inflation is not going to stop. No matter what the Fed says, they can't cut rates at this point, okay? And the only thing that they can do is buy gold, and so should you. Not financial advice, but if they're doing it, you should do it, right? Not what they tell you to do. Don't go buy stocks. Don't go buy stupid apples and things like that, even if it goes up a little bit. It's all manipulated. Insiders are selling, okay? So let's look at the fear and greed indicator. So the fear and greed indicator is finally, man, I've been looking for this. I mean, it's been stuck in this fear level for so long. We're back to neutral. Okay. What does that mean? Does that mean that the market is going to start turn around and collapse right away? No, but it means that the complacency is coming in. About a year ago, we were at greed level. Okay. People couldn't see straight because we were going to the moon, right? But now, the traders, the retail traders especially, are a little bit more cautious, right? And so should you. But this is better, right? I'd like to see it go into the greed level. It may, but we'll talk about that in the technical analysis section. But we're getting closer. Is it sell in May and go away yet? No, not yet. Okay, and but we've been looking at that very, very closely, and you heard it here. I didn't tell you to go out and buy puts like crazy, but you can trade opportunistically if you know where to look, right? Especially if you're, more of a bearish bent trader, then you can do that. So, what does our directional indicator, especially the MSI, which is McClellan Summation Index and put to call ratio, say? Well, here is my put to call ratio, and as I said, this yellow lines here is basically the range. We pop over and then we come right back in. The market really is complacent. It is in a choppy range bound area, but the issue is that if you look, is that we are basically obeying this trend line, right? And that trend line is basically rising. Okay, we just bounced below it and went up. Just faked everybody out that we're gonna go much, much lower, which is bullish, right? Low put to call ratio means that people are buying calls. High put to call ratio is up here, here means that people are buying puts, right? So is there complacency? Of course there's complacency. So we have suppressed put to call ratio, which shows significant bullish bias still. It's holding above the trend line, however, so keep an eye on that. It will chop in this area, okay? I know it's election cycle. I know I talked about the 2020 analog. It kind of came true, but we're running out of time on that, but we still have time until about May 28th to June 5th, After that, we go into low volume, lower volatility. I can't talk this morning. Grind up higher situation, right? And we have ways to trade that. Right now, it's choppy, range-bound molasses. I mean, I mean, last week was a yawner and a half, right? Until Friday, a little bit. But even then, it couldn't take out key levels. Okay, and we'll talk more about that in part two. Otherwise, I'll be talking to you guys for 3 hours, and you guys will probably go through half of it and fall asleep. Okay, don't fall asleep. This is good information, folks. MSI continues to show strength for the bulls, and it's a directional move. We talked about it blipping out. We're now out of this zone, and we're testing this area. Here's the trend line that basically should stop it. Okay, maybe pop above it, but we're in the zone of selling right at these level. Can it get up to here? Well, it can, but that basically um, would mean that the CPI numbers are great, and we don't really know what CPI is going to come out, right? Because of the Fed and the U.S. government alphabet agencies' propensity and the ability to lie, and for the ability of the masses to believe those lies. Okay, so we are nearing this major zone right here. Okay, so that's something that we need to keep an eye on. Okay, MACD on this. MSI, we've had a bullish crossover. Here's a downtrending line. I believe it will probably poke over there and then start failing. And we got to look at this histogram, which is fully directional right now. But these things can turn in a couple of days, but we have to obey what we see, not argue with what we don't see, right? I know what we want. Everybody thinks we're going to break down right away, but we have to take our shots and make sure that we're not too heavily invested into any side right now, because we are still at that inflection point, and that's where the bulls and bears lose money. Okay, so thus far, we talked about earnings, and we're winding down on earnings. I think we have Nvidia coming up, I think next week, not this coming week, but there are still good, mid cap to small cap stocks that are going to be reporting. Especially the Chinese stocks are reporting this week, and we'll see how that goes. But Baidu, Baba, we got JD. I mean, a whole slew of them, and and China is trying to support their market. So we'll see how that comes out. Okay. My guess is if we're suffering here, with other parts of the world are also having consumer demand destruction. Okay. And what great way to look at Baba, right? And all the AI type stocks are getting taken out to the woodshed, which is Baidu, right? Think about that. We'll talk about that later. But consumer demand destruction thesis is alive and well. And that means that if we look at these, we started with Disney, and I mentioned to you that Disney falling into this area, coming right down. Okay, that basically was the kind of the nail in the coffin again, about the consumers being tapped out. No one's going to spend $200 a day, spend $1,000, and plus all that cheap food and crap that you don't need, and then staying in line for hours on end, or having to buy these fast passes now. I mean, isn't the whole idea of paying for a ticket to get in is to enjoy those rides? And instead, you get basically followed around and told what to do by rude employees. And believe me, Disney employees are rude. It's not the happiest place on earth. And at least that's been my experience. I grew up in Southern Cal, so I can tell you that I do not like Disneyland. But having said that, no one should be going there to basically stand in line in a crowded place with hundreds of thousands and millions of people just to get on a ride and pay $200 to do that per person. Okay. And the consumers are finally speaking because they're broke, guys. Roblox. Okay. How many of you guys have, teenagers all the way down to like 5-year-olds? They love Roblox. And Roblox was predicated on digital kind of real estate and things that you can buy, and the kids love it. The problem is when the credit card is maxed out, and maybe the parents aren't earning as much, and the milk is costing XYZ, and gas costs so much, and the shelter is going up. All of a sudden, that's inflation, but you're either losing your job, or basically the growth in the industry. That's called stagflation. Okay, this is what happens, and we warned you about Roblox. I said keep an eye on Disney, Roblox, and then of course I said Affirm. I didn't do Upstart because I didn't want to spend too much time on it. But look at Affirm, okay? Affirm on the daily, right? After earnings, they blew away all estimates, got near this 100-day moving average, and sold off. That's very bearish, folks. And then they tried to attempt to recover and then sold off. And I said, if you missed that earnings, wait until 34 to 35 to jump on. I think that it's going to probably have another reaction higher and then continue to go down because a firm really relies on consumers who are tapped out, who doesn't have any more credit card ability, and then they go to like Amazon or JD.com, I don't know, wherever they go, and then they break up their payments into four equal payments, or basically finance those things that they can't do with either store cards or basically, with their credit cards because they're tapped out. Okay, so that is going up. But you know what's going on with a firm? You know why it's dropping? Because the default rate's going to go through the roof in the next couple of quarters. I mean, this is something that basically everyone needs to pay attention. It's a bloated pig. I mean, there's a gap down here. As you can see, there's gap all over the place, all the way down to 24 to 25. So you go do the math, okay? But I've told you this, and if you listen, you would have benefited handsomely after the earnings. On Friday, it was fantastic. It hit like 34, 35, and then went all the way down to 31. Okay, so that's a good deal, right? I told you to keep an eye on Airbnb. Okay, the hotel alternative. If people aren't spending money at Disney or Disney Plus or Hulu, you think they're going to be spending money to go rent expensive, overpriced Airbnb homes, right? People are tapped out. They're trying to survive, right? Airbnb, okay, watch for this move to the 200-day moving average. We'll talk more about it later, all right, for a little bounce. But Airbnb is a bloated pig also. It's going down, folks. But this is the consumer demand destruction I've been talking about. So let's do some S&P sector analysis. And so I took the liberty of taking the snapshot. I've shown you this, and I've arranged it based on strength, okay? And what is the odd man out here, okay? And that is that all of the ones that are basically in the high ranking area, I don't consider 7561 high. However, you see these green areas, these are trends that are increasing. Now, utilities are defensive sector. Financial sectors can be defensive, and because the Fed and the central banks are hell-bent on making sure that the banks stay afloat, even though they're insolvent, okay? So that they have strength. Industrial sectors, communication, materials, and consumer staples. These are like food, like Kroger's, and the defensive sectors when market is in a bad area. These are the rotation into the defensive sectors. Those are what's doing well. What's lagging? Oh my gosh, it's technology, guys. And we'll dig into technology a little bit. And consumer discretionary. These are the Airbnbs, folks. These are the Robloxes. These are the Lululemons and restoration hardware where people aren't going to spend money on cheap Chinese-made crap. That's not worth anything, folks. Okay, so let's dig into that. Okay, and a healthcare fund. Okay, healthcare was on a rampage for a while, and then basically it's coming down. Look at this, though. Energy sector fund. Why is that? Because the alternative energy sector is faltering. Okay, you want to basically look into areas that are going to be weak. It's going to be the solar, the batteries, the things like I know Tesla doesn't belong in here, but those kind of things. Okay, you've been sold a farce. Okay, I know the oil industry is evil too, but this whole drive towards clean energy really is not working out, right? And then of course real estate sector fund. This is probably where Airbnb and all the hotels are. Okay, are you going to travel when you're tapped out on your credit cards and when you're feeling poor? I don't think so. So having said that, I've took the liberty of boxing out into these orange areas where there is strength. Okay, and what I mean by strength is, are they above the 20 and 50 period moving averages? And what are they? Industrials. Okay, these are basically manufacturing, steel, and those kind of things where people move their money into when they're afraid. Okay, and hence that's what's driving the S&P 500. You got to look at this level. We will talk more about that in the technical analysis section. Okay, building materials or materials, these are the people that make the nuts and bolts things, okay, above the 50-day moving average. Okay, we got the communications, these are the phone companies, okay? These are the satellite companies, Dish and everything else, where people are going to be less apt to cut, right? You need Verizons, you need AT&Ts, and this is what this is about. You really want to be led by these guys? Okay, here's the consumer staples. Okay, these are the food, Kroger's, ConAgra's, people, that are still going to be buying food. And so this is the defensive sector, utilities. I'm not even going to talk about that. Okay, these are the power and water companies and things like that of that nature, right? And then the financials are being goosed up by the central bank. Okay, so that's where the strength is. And the consumer discretionaries, we talked about that, technology, energy, healthcare and real estate. Pay attention to this. Commercial real estate destruction is real, folks, and no one's talking about it yet, but you heard it. I'm talking about it. I've been talking about it. Let's get more into a little more digging into the consumer discretionary and technology sector, shall we? Okay. So as I have said, I've basically, this is from stock charts. Love stock charts. They're a little clunky to navigate, but there's so much information here, folks. Okay. And so we basically have the sector that I've marked. Of course, the utilities and all these guys in the green are having strength. So let's go into technology sector and see what's going on in there, okay? And who are the ones that has the most strength? It's the semis, okay? It's strong, okay? Renewable energy, okay? Those are the solars and things like that. But look, okay, if you want to look for areas that might be topping, you look into this group. So what are in renewable energies? Okay, let's group them into strength. Not very strong at all. We got First Solar, but again, their trend is negative. Okay, SciTech, I've never even heard of these guys. Okay, it's a dollar company, but they're going up. So penny trader stocks, you might want to look at these. But everything else is like Ballard Power, everything, right, is going down. Okay, if you want to learn more about how to screen these, I'm available for consultation. Okay, folks. The other thing is that what are on the lower end of the spectrum? Okay, we got the telecommunications equipment people. Okay, and who are strong. Okay, at minimum. These are all kind of penny stock type people. Arista Network is showing some strength. Okay, if you want to go on the long side, but when the market starts bouncing in the summer, we'll be looking at these sectors, right? Let's look at way at the bottom. Who are there? Okay, Cisco's at the bottom. Oh my gosh, how's Cisco down there, right? Because we're not doing well, folks. Okay, so this is the technology telecom section. Let's look at who are the lowest computer services. Who are in there? Okay, it's basically the data dogs of the world, right? Here's all the strength, and then here's all the weaklings and the middlings. But you got to pay attention to the middle area here, okay? So CDW Corp, they sell computer equipment to, companies. Xerox is there, okay? Let's look through this, all of these, okay? Um, and so if you're looking for some weakness, Care Cloud, Core Scientific, these are all, but you can screen these the way you want. But realistically, if you look at all these, okay, you really want to look at the ones that are doing well, that have a negative tendency. These are probably the ones that are going to be weak. Of course, we don't really chase after $3 stocks, right? But these are obscure companies, okay, for the most part, that are basically showing strength. The weaklings of the bunch that have been lagging are now leading the way up, okay? So let's look quickly into computer hardware. Okay, who's in computer hardware? Who are the very weak, right? We got Dell and the usual groups, but who's really lagging? Okay, Apple's lagging, right? Negative. But then, on the negative front, you got all these different companies here like Roku, right? I've been talking about Roku. This is something that you might want to look at, in terms of if there's going to be more weakness. Okay. So why am I talking about these? It's because when you look at these and when you see these defensive sectors leading, that's where the strength is going. This is what's keeping S&P 500 sort of propped up for now. Okay, not gonna last. Okay, I guess the CPI data will be the key and the tell. So we talked about sell in May and go away. I said not quite yet, and I think I still hold on to that. You can build positions with a lot of time. That's a little bit of front running. And if you're doing well, as a whole, last week was challenging, but we did pretty well, right? And so we really want to look at what's going to be the key driving factor, either to the upside or to the downside. We know the McClellan Summation Index is fully directional to the upside, right? How long is that going to last? And we know that the 2020 analog is running out of time, right? So one last hurrah might come from the CPI, which will be the key. It's going to be reporting those numbers on May 15th, which is Wednesday at 8:30 a.m., right? So let's dive into that, okay? Does anyone believe out there right now that from 2022 that we had decrease in inflation? All you have to do is go look at your rent, home prices, gasoline, everything else. Everything has gone through the roof. I mean, you go to McDonald's for a family of four, you will spend $60 to $70 on Happy Meals, okay? And so the fact that the U.S. government and our agencies are telling us that this is normal, and we are freaking out about potentially this going higher, is a farce. Okay, the fact that we're expecting 3.4%, okay, and saying that the overall inflationary pressure is 3.4% is a lie. And I'm going to tell you that hardly anyone believes the CPI numbers anymore, unless you're basically living on Mars. When you look at it in totality, okay, I think there was less inflation in 2022 to 2023 than there are right now. And yet they're trying to sell you a lie because you know why? It's presidential election cycle, right? The other thing I want to show you, is that are they saying that the inflation, food inflation, is 2%? Are you kidding? Have you gone grocery shopping or just even gone to Chipotle's and bought that expensive burrito or McDonald's even, right? Are we to believe that the energy cost is at 2%? Okay, 2% inflationary pressure. Sorry, I dropped my pen. Okay. And yet inflation is ticking up. Oh my God, what are we gonna do? Our Fed's goal is to keep that inflation rate below 2% and maximum jobs. You know how many people are losing jobs right now? You know how hard it is to find jobs. Okay, so that's just something ridiculous, right? So I want to bring home one more point. Okay, check this out. The milk per gallon in 2023 was $4.03. This is from U.S. inflation calculator. I'm not making these numbers up, folks. If you go to Safeway.com and here's the milk, okay, $5.99, right? That is a 38.5% increase. So milk goes into everything, right? And milk is not the highest inflationary product in your grocery store. Yet 38.5 increase from 2023 to date, May 2024 at Safeway.com. Most food items have gone up higher. And they're saying that we are to believe that there's 2% inflation. Why are consumers tapped out? Why are they using credit cards to buy food? Okay, instead of buying Disneyland tickets. You go do the math. Okay, I'm going to leave you with one more thing, okay, because this is infuriating. All right. So I said, are they telling the truth? U.S. Bureau of Labor Statistics. I think some people call them U.S. Bureau of Lies and I don't know, statistics. I don't know. Let's see. Let's see what it really is. Okay. I think this is just some fun things to do. Okay, they're saying all items in the 12-month percent change is what, 8.1%. We went from 2022 to 5.7% inflation. Okay, I just showed you what the milk price is, right? We've gone up 38.5%. And let's just look at food. They're saying that food prices have come down. Okay, it did not. Okay, let's look at gasoline. Did the gasoline prices come down? Look at this. From where we are? No, it did not, right? Let's look at shelter. Okay. Shelter is a 6.2 decline from 7.5. Have you looked at the home prices and rent prices? Right? Okay. Let's look at some other stuff. Okay. Okay, let's look at the selected category. Let's go there. Okay. So they're saying this is where we are. Do you believe that? I don't. I don't believe we're down here. Okay. Okay, let's go look at energy. Okay. They're saying it's creeping up, right? Okay, so basically, when you look at these energy, and let's go look at food at home. Okay, do you believe all of these numbers? Okay, what are they really? Medical care services? Have you looked at your deductibles? Right, new vehicle prices are coming down. Are you serious? Is this the new medical services, food at home? I mean, this is ridiculous. You can go to this site right here and then you go plug it in and then see if you believe it. Most Americans don't know where to go look at. They just listen to Fox News and CNBC and they think everything they tell you is the truth. Okay. So in part two, I'm going to be talking about the technical market macroeconomic analysis. So stay tuned for that. In synopsis, MSI is fully directional for this part one. Okay. For now, it's bullish, but it is approaching key zones and resistance levels. So we need to pay attention because MSI does not lie. It is my best directional indicator. And fear and greed has reverted to neutral, much more conducive for a major trend change. Okay. Now, the news cycle is admitting to tapped out consumers. I've been harping on this since last year, right? And then, of course, the war, Israel and Gaza situation. Okay, so they don't have a deal, right? And then Hezbollah is attacking now Israel on the northern front. So you got to look at that, right? Put to call ratio is low at zero point 0.6, but bouncing off a trend line, okay? This is kind of a contrarian indicator. The lower it goes, the more likelihood of having a rip your face off sell off. It rips your face off on both ways, okay? U.S. Bureau of Labor Statistics on inflation. Got milk, guys? I just showed you what milk is. Are you to believe that the grocery prices have gone up only 4%? Okay, milk prices have gone up 38.5% over the last year. So the CPI month over month expectation is 0.3%. Unless they continue to lie and fudge numbers, this number will lead to markets freaking out. Okay, if it goes higher, we'll see. Okay, will they continue to lie? And if they do lie, will you continue to believe? Okay, we will trade any which way that it will go. But you know, this is something that I think is going to be a critical item that will determine the further direction of the market. I believe we're going to start on that summer low volatility, low volume, grind up higher into the election year cycle. Okay. That's why I think the 2020 market analog cycle probably has run its course in the next couple of weeks. Okay. There's still time. But you know, you need to be a little careful. But we'll talk about that in the technical analysis section. Okay, so I really need your help, folks. If you made it this far, and I talked about it before, please like us, share us, and above all, comment, good and bad, and subscribe, all right? You want to find out how to work with us, you need consultation, you want to go through some trader psychology, talk about the market direction or what it is that I'm doing here, and you want to learn more, I have a whole slew of offerings. Email me, okay? Also, there's a few people out there that are basically giving me thumbs up, and that's fine if you basically believe that. But I bet it's the two same people, and I have an idea who that is. But realistically, I think I would appreciate a thumbs up if you like this video, okay? If you agreed that this is something that helped you, okay? Other than that, thank you so much for watching, and I'll talk to you next time.